Last Thursday we started the 1040 easy for this person, Elizabeth Allison, but we're going to start over. Here's her W-2. Her wages, salary, and tips are $83,600. Her federal income tax withheld is $15,884. Then she had some local stuff going on, but we're not going to be worried about that. Her bank interest is $956. Okay, that's the information that we need to start filling out her 1040 EZ. And she can fill this out because she's single and has no dependents. So again, we have to do all of the highlighted areas must be filled out. If they're not filled out, then your tax return gets rejected. You have to do it over. Town. Okay, so that all has to be done. Now, spouse line, this line that you only have to fill out if you actually have a spouse. If you don't have a spouse, you don't have to have information there. Presidential election campaign, you only need to check this off if you actually want to contribute to the president's election campaign. If you don't want to give them any money, then you don't click this. Nobody is making you. It's totally optional. And checking this or not checking this will have no bearing on anything to do with your taxes other than they'll deduct $3 if you do check it. Okay. Her wages, salary, and tips were $83,600. Okay. Taxable interest. I don't have this highlighted because it won't pertain to everybody. If you don't have an interest-bearing account, bank account, you know, like a savings account or a CD or money market or something, then you don't earn any interest, then you don't have to fill this out. But if you have any bank interest, you have to put it here, and if it's over $1,500, you can't use this form. So if you have $1,502 worth of interest, you have to use a different form. Yeah. Yes. No, for your taxes as a whole. You have to use a 1040A or a 1040. Okay. The 1040 easy is very limited as to who can use it. Okay, well, her bank interest was $956. That was on the 1099, so that's going to go here. Unemployment compensation. If you were on unemployment, you do have to pay taxes for that, income tax. And if you are an Alaska Permanent Fund dividend person, which most people are not, but if you are, then you pay taxes on that. But of course, she had no unemployment insurance compensation. We're going to just say that. So you leave it blank, or if you want, you can put a 0 in there. That's your choice, leaving it blank or putting a 0. It doesn't matter which. And then you'll add lines 1, 2, and 3. This is where I hit the wrong button on the calculator last time. And this is your adjusted gross income. Your adjusted gross income is the total from all sources. Now this one, wages, salary, and tips, if you have more than one job, like you have 2 or 3 or 4 different jobs or something ridiculous, I think it would be ridiculous if you had 4 jobs, but let's just say you did. You had 4 jobs. You get 4 W-2s. You add them together. This is the total. If you have bank interest from 5 different banks, you would add it all together and put the total here. As long as it's under $1,500, that's okay. And then you add that up to get your total from all sources. Now, if somebody can claim you, you check it off. Like if you still live at home or your parents are still claiming you, you check that off. And then there's a worksheet on the back, line 5. If you're being claimed, you need to fill out this worksheet. You put your total amount from line 1 on front. That's your total wages. You add 300 and you put that here. Subtract 950. Sorry. Line A or B. Whatever's larger, sorry, you don't subtract. So if line A is bigger than line B, you write that down here. If line B is bigger, you write it down here. Then you enter this deduction and you subtract. So you follow this and you would do that number would go here. But we're going to say that Elizabeth does not live at home. So she's not being claimed by anybody, so we're not going to check that off. She's single. So we enter 9750 here. Okay? So single, married. So if you're married, you get a higher deduction. But that's because it's counting for 2 people instead of just 1. So here we added, here we're going to subtract. So 84,556 minus 9,750. This is the taxable income after her standard deduction. Okay. Now, when you talk about deductions, we have standard deduction or itemized deductions. Itemized deductions are deductions that you count up from like your receipts all year long that you're keeping and medical bills and things like that. Whether you want to itemize or whether you want to take the standard deduction depends on the total of what you would itemize. If your total of all the stuff you saved up all year is less than 9,750, don't itemize. Take the bigger one. So you would take the 9,000, you'd take the standard. If your total is more than the standard, then you would itemize, but you can't use this form. And we'll get into that form and how to do all that. We're going to work up from the easiest one to the most complicated. So. Okay, now your federal income tax withheld from forms W-2 and a 1099. Now this, some people that 1099 you will take out taxes, but it's exceedingly rare for that to happen. I mean, almost never. So mostly you're going to look on your W-2s. So if you look on here, there's a line. I can't even read it. There's a line here, I think it's this one, where taxes would go if they withheld them. But here we have our federal income tax withheld was the $15,884. So that goes right here. So this is the tax already paid. Okay, so that comes on your W-2s. Now, earned income credit, you want to see the instructions for that to see if we qualify for that. And we will talk about that, but we're not going to do that quite today. Okay, today we're going to keep it very basic. So if you qualify for an earned income credit, that number goes here. If you had non-taxable combat pay, that number goes here. Okay, and we add this together, this and this and this. And we get our total payments and credits. Now, tax, line 10. This is from the tax table. So we have to go look that up in here. Okay. So her income, her adjusted gross income, line 6 is what we want to look at for. So 74,806. So first we find the 70s. And then we find 74,000s. Okay. Now remember, this first column is single, married jointly, married separately, and head of household. She's 74,806. So she's right in here. That's her right there. 14,736. That's how much her tax bill is. So okay, this is the bill. She already paid 15,884. Her bill is 14,736. If 9 is larger than 10, you get a refund. If 10 is larger than 9, you owe money. But she paid more than she owes, so she's going to get that back. So we're going to subtract those. And that goes on 1148, goes on line 11. So her refund is $1,148. Okay. Then the next thing you absolutely have to do is you have to sign and date. So Elizabeth, Allison, and today's date. You would never do your taxes in November, so I'm going to be more realistic. I'm going to say February 10th. And this is 2012 taxes, so it would be 2013. And her occupation is, did it say what she does? Oh, food editor. Food editor. And her phone number is 555-123-4567. So that has to be filled out. This section only gets filled out if you want to allow somebody else to talk to the IRS on your behalf. If you have an accountant, tax lawyer, something like that, that's when that gets filled out, because otherwise the IRS doesn't have permission to speak to anyone else about your taxes but you, unless you give them permission on this paper. And then this section here, if you pay somebody to prepare your taxes for you, they have to fill out their information here. Any questions on the EZ form? It's like I said, it's kind of nice. It's like just, this is how much I made. This is how much my taxes were that I paid. This is how much my taxes are supposed to be. Give me my refund. Or here's my check. But it's very, there's not a lot to it. Okay, so I didn't assign this one yet. That's what I'm saying, we can do it. So number 34 is Rockland School teacher, runs a tennis shop. They have combined bank interest of $1,011, and Nikki made $850 in tips. If they get a refund, they want their money deposited into their checking account. Routing number and checking account number, routing number, and so we're going to complete their, it didn't work out that way this time, complete their 1040 easy. Okay, so here's their, oops, stop the microphone. Here's their W-2s. Okay, and don't forget they have bank interest. And she got tips. So put the tips with her just to keep things straight. Okay, so we're going to fill out their 1040 EZ. I don't know if how you pronounce that. It's M-U-K-U-L. Okay. And her name is Nikki. It was N-I-K-K-I. their social security numbers. Okay, so we've got their name and stuff. Their address is actually here on the W-2, so I'm going to go ahead and put it on there. And they don't care about the president. So they're not going to give the president any money this time. Okay, wages, salaries, and tips. All right, now if we look, we have these wages, and we have these wages, and we have the tips. So we've got three numbers to add up. So 4212676, 66199, and 850. I made a mistake. Interesting. Okay, we're going to have to change one of these numbers because I made a mistake. They went over, and I wanted you to do a 1040 easy, but you can't do a 1040 easy for this because they made too much money. So we're going to change the 66 to like a 26. Okay, just change that 6 to a 2. Yeah, I'm also going to change the taxes just to make it work. We're going to change that to change the taxes to 65.49. Okay. Okay, so sorry about that, but we're going to just fix that problem right now. Okay, so the total wages, instead of being plus 66, they'll be plus 26. So I've got $42,126.76 plus 26,199 plus 850, and that puts us in the can use the form zone. Okay. So that total is going to go here on line 1. Okay. Taxable interest, they had 1,011. No unemployment compensation. This is total income. Yeah, total income. Because we just added up their income. We haven't adjusted it yet. We add that with their bank interest, and that brings them to $70,186.76. Now they are married, so they're going to claim the $19,500 standard deduction. And that brings their taxable income down to $50,686. Any questions about the income part? All right, so now we've done their income.
I have another question.
Yeah.
Attached forms W-2, do you actually have to literally like staple them together? Or?
You would attach them at the top, like, so if this was your tax paper and this was your W-2s, you'll just staple them together at the top. Okay. Yeah, if you're doing paper taxes though, you do have to give them a copy of your W-2s, 1099s, a copy of the 1099 that you get for the bank interest, everything. Yeah. Okay. federal income tax withheld, we've got the two different taxes. We've got on the first 8,198. And then, of course, I changed the tax on the second one because I changed the. So 14,747 was their total tax withheld. Okay. Again, earned income credit we're going to go over later. For now, just ignore that. No combat pay elections, so we'll have the same as their total pay. Okay, to find their tax, we're going to go back to our tax table again, except for this time we're going to go in the 50,000s. And we're going to be in the second column. We've got single, married jointly, married separately, and head of household, right? Well, they're 50,686. So that's falling between 650 and 700. And they're married filing jointly, so $6,731. And they way overpaid on their taxes. So they're going to get a huge refund. Any questions on that so far? Okay, now they gave us bank information to have their refund direct deposited. That's right here. The routing number I guess is too long, and the account number. Bank routing numbers are standard. I just put one too many digits in my fake routing number. Sure. You have to say if it's a checking or savings, and then you put the account number. Getting your income tax return direct deposited makes you receive it faster than if they mail a paper check. Okay. Usually quite a bit faster. Okay, the 1040A is another short form that does not allow itemization. But it does allow dependents and stock dividends. It also allows some other types of credits and deductions. Okay. So it's still considered to be a short form, but it is longer than the easy. Okay, now for those of you that have a child but don't want to itemize your deductions, this is the form that you would use. Okay, so I want to look over it really quickly together. I'll let you guys copy that first. Same basic top, half, or quarter, or whatever you want to call it. You know, you still have your name and your address and your social security number and all of that. On the 1040 Easy, we only had two choices: single or married filing jointly. So you did not have to check anything off. If there's one name on there, you were single, and if there were two names on there, you were married filing jointly. That's just all there was. Now on the 1040A, you have to choose what your filing status is. So single, married filing jointly, married filing separately, head of household with qualifying person. If a qualifying person is a child but not your dependent, you have to put their name there. And then qualifying widow or widower with a dependent child. You have to choose whichever of those situations is yours. You check, it's just a check mark, you just check it off. Okay, then you claim exemptions. You get one exemption per dependent. Okay, so there's one for you, one for your spouse if you have one, so you check those off. And then you list your dependents here. You have to have their first and last name, you have to have their social security number, their relationship for you, and if it's a child under 17 for child tax credit. Okay, and then you check that box. Now they don't necessarily have to be a child. Again, I said, your parents that are elderly that you take care of or something qualify. Then you have to say, okay, how many of boxes 6A and 6B did you check off? So 1 or 2 goes here. Then number of children on 6C that lived with you, that number goes here, or that did not live with you, that number goes here. And that's for divorce or separation, and there's special instructions for that. And then anyone not entered above, so not children. So you have your children that lived with you or didn't live with you, and then you had the not children people that go right here. Yeah, like elderly or your disabled sibling that you care for, something like, somebody that's not a child. That you're financially, and they are legally allowed to be claimed by you. So again, like if your deadbeat roommate you financially support, they're not your dependent.
Okay.
They have to be like a relation. Okay. So then you total those numbers here. And then this number will come up on the back side. Then you have the wages. Again, that's the same as on the 1040EZ. You add up all of the wages. You have all of the interest. Okay, attach Schedule B. Now, Schedule B is required if you have more than one source. Okay. So if I have interest, or over 1,500. If I have interest from 3 banks, because I have 3 different bank accounts where I get interest from, I would attach a Schedule B and I list the 3 banks. If my interest is more than 1,500, even if it's from one bank, I attach a Schedule B. The Schedule B form you guys have a copy of looks like this, and it's only to be attached to the 1040A or the 1040. You don't use this with a 1040EZ. There are no attachments with the 1040EZ other than your W-2s and 1099s. Okay. Then you have tax-exempt interest. Tax-exempt interest is, for example, interest on your retirement account. And that's because that's tax-exempt until you take the money out of the account. Then it starts being taxed. But if you get a form like from the bank that you have your retirement account stating your interest, then you fill that out right here. Then you have ordinary dividends. This is your stock dividends. So if you received checks from companies that you own stock in, that total goes here. Attach Schedule B if required. Again, you only have to attach the Schedule B if you had more than one source on this one. So if you only had stock dividends, say from Target, that's the only company you had stock dividends from, you don't have to attach anything. But if you had stock with a couple different companies and you received dividends, then same Schedule B, the top is for bank interest, the middle is for dividends. So that would go here. We'll talk about that too. You have qualified dividends, you have capital gain distributions, IRA, pensions, all this kind of stuff that can happen. So if you're retired, those monies go here That's income. Then you have the unemployment or Alaska Permanent Fund, the same as the 1040EZ. If you're getting Social Security because you're on disability, that goes here. Or if you're getting Social Security because you're retired. And then there's a taxable amount. There's instructions for how to figure that out. And that would go there. And then you'd add all this up to get your total income. Okay. Then you can have different kinds of sort of standard-y deductions. They're not the standard deduction, but they're standard-ish. They don't need to be itemized. If you're a teacher, you can deduct up to $200 per year that you've spent in your classroom, but you better be able to back it up. Like you should have receipts for pencils and posters or whatever else that you bought for your classroom. And the maximum is $200. And this is only for teachers. Okay. IRA deductions, that would go here. If you have student loan interest deduction, so if you pay interest on your student loans that year, that goes here. If you paid for tuition and fees, so if you're in school and you pay tuition and fees, that goes here. Yeah.
Does that count for the tuition that we pay here?
Yeah, you can put your tuition that you pay here. Now, if your tuition though is being paid with federal financial aid, like student loans or whatever, that doesn't get deducted because the government's already paying for it.
Right, but it's like our $30.
Yes, you can put that on there.
Right.
Yeah, and you'd have 2 or 3 semesters, right? So you could charge up to 90 on that. Yeah. Now you'll need a form, and you'll need a form from the school saying.
For financial aid, if you have it, you have to attach that form?
No, if you have tuition and fees, you attach this form.
But financial aid doesn't count?
No, okay, so some student loan tuition can be counted because it's a loan, but like if you have a Pell Grant or things like that, so if it's a subsidized loan versus there's subsidized versus unsubsidized, and then there's Pell Grant and stuff. So but your college can give you what's called a 1098, and the 1098 is like the 1099, and except instead of income, it tells how much tuition and fees can be put on this line.
Right.
So if you have qualifying tuition and fees, you can get a 1098 from the college. If you don't have qualifying tuition and fees, it'll be zero. So it should be, yeah. So you should be able to get your 1098 from like over in the A building, like the cashier's office or whatever. You could talk to them. It's $30. Yeah. Okay. Now you'll add these lines up here, and that goes here, and then that gets subtracted from your income, and you get your adjusted gross income. Now, keep in mind you haven't done your standard deduction yet. Not everything on here will pertain to everyone. Some people will go straight from line 7 to line 21 with nothing else happening. Okay? Then, unlike the 1040EZ, this one has a backside. So you flip it over, and the number that you had here on this line, you write it again right here. That's because they don't want you to mess up. Okay. Here, you check this box or this box if you were born before 1948. Any of you born before 1948?
That's like my grandfather.
No, I meant you guys in class right now.
No, I mean, that's like the only person I know.
Okay. Anybody blind would check this box. Okay. Legally blind. Then you'd have 2 boxes checked, and you'd write a 2. Okay. If you are married, filing separately. Okay. Now, remember over here on married filing separately, it said interspouse's social security number above and put their name here. If you're married filing separately and they're itemizing, so then you check here. Or you'd be together and you'd figure it out, yeah. So, yeah, you'd have to check there. Yeah. So then here you enter your standard deduction. Your standard deduction can be found right here. Okay. Now this form is 2012. The 1040EZ I gave you was also 2012. You'll notice that the standard deductions are a little different. I don't know why. But whatever your standard deduction is, you put it here. Oh, I know why, because you're getting exemptions. That's why. That's why it's different. Because on the 1040EZ, there are no exemptions. So if you add your exemption and your standard deduction here, it ends up being the same amount. Okay, exemptions. You multiply 3,800 by the number of people on line 60. That's this line back over here where I told you had to total up all of your dependents. And then these get subtracted from your income also. And that gives you your taxable income, how much they can tax you on. Then you look up your tax from the tax table. And then there's these credits here for child and dependent care expenses. There's a form. And care for the elderly or disabled, there's a schedule form. It's a form. Anything that's a schedule or a form is a form. Education credits from Form 8863, line 19, form. Retirement savings contribution credit, form. Child tax credit, form. So for all of these things, you'd have 1, 2, 3, 4, 5, 6 possible, or 7 if you have to attach a Schedule B, 7 additional forms that you might have to attach to this so far. It would only depend on if these applied to you or not.
Right, but if they do,
Then you have to fill out this form. You have to fill out it. No, you have to. The person, what person? You have to get it off the IRS website.
okay, so
Like if you're doing your own taxes, you print it off the internet, yeah.
right.
Or if you, I don't know if they still do it.
Could you get it because it's IRS like location and maintenance?
You could probably go to that office and they probably would have the forms also,
Right.
yeah. But then you probably have to wait in line for like an hour just to pick up a piece of paper, most likely.
Right.
It'd be easier just to print it offline. That's how I got these. I printed them offline.
Right.
Okay. So you've gone through and you've done all your forms and you've got your tax credits and you've got your total tax. Okay. Then you have your tax that you've paid. This one is 2012 estimated tax payments and amount applied from the 2011 return. Now you can, if you want to. So in like this year, you're going to be filing your 2014 taxes. If you think that next year you might not be paying enough taxes, you could take some of your refund and apply it to this coming 2015 year. You can do that, yeah. So you can say, well, I know I'm going to be making more money. Maybe I'm picking up a side job and I'm an independent contractor and I'm going to make like $10,000 more, so these taxes aren't going to come out because it's independent contracting or something. So I'm going to have my refund from this year applied to 2015 taxes.
Right.
So you can do that. And if you had done that the previous year, you would put that here. It depends. Yeah, you could do it to get to build up your refund. Yeah. Okay, then if you earned the earned income credit, there's a form. You put that here. If you had the non-taxable combat pay, which most of you, additional child tax credit, there's another form.
Where do you put that? Put it on the next one,
Huh? Oh, here? Oh, no, we haven't gotten to that part yet. This is if you had done it last year. Okay. American Opportunity Credit, there's a form. American Opportunity Credit, I believe, has something to do with school. We'll look it up. Okay, then you add all of this up, and that's how much you paid. This is your total tax up here. No, sorry, here's your total tax, 35. 41 is how much you paid. If 35 is greater than 41, you owe money. If 41 is greater than 35, you get a refund. And that says that right here.
So if you add 36 to 39?
Yeah, see, and it tells you that right here on line 41, add lines. The whole thing has directions in it. So you need to just like be sure to read the lines, and it pretty much kind of tells you what to do. Okay, so if you're getting it refunded, you put that number here. If you want it applied to your the next following year taxes, so if you want your 2014 refund applied to 2015, that's line 44 right down there. Do you see that where it says applied to your 2013 taxes? That's because we're using a 2012 form. So if you wanted to do that, so let's say your refund is small. Like, you know, it's not a lot of money. You could potentially, if you wanted to, say, okay, put that on my 2015 taxes, and then it would get added to your 2015 refund. And if that was still kind of small, you could potentially push that forward and build it up that way if you wanted to.
Like take some money out and then put some money for the next year?
Yes, you can do that. You could split it between these two lines as long as it came out to the right total. Okay. See, here's the amount you overpaid goes here. That's the total, and then you can either have it all refunded, have it all applied, or you can split it between the two. And then if you underpaid, you owe money, that goes right there. Okay. Estimated tax penalty. This happens if you underpay. Like we'll read that later. This doesn't, even if you owe money, this doesn't usually happen. The penalty. Okay. Any questions on any of what we just went over? I mean, we're going to do it with actual numbers too, but just any questions on the general overview of it? We have Kenya and Robin Omar. They are married with one child. Okay, so I'm going to start by filling that out. Kenya, Omar, and we have Robin Omar. Okay, we're just going to assume that we filled those out and this out. Okay. They have one child. They were very creative. They named their child Kid 1. Okay. You would put their social security number here, and their relationship to you is child. Or you could say son or daughter, something like that. And they're under 17, so they live at home.
Are they married, filing?
I was just getting to I was only going through this first line right here. Okay. He's a pharmacist, she's a store manager, their W-2s are below. We have bank interest and stock dividends. Okay. They decided they don't have enough deductions to itemize. All right, so we're going to start with their exemptions. First of all, they're going to be married filing jointly, so you've got to check that box off. And their exemptions, we have Kenya, we have Robin, and we have a child. So Kenya and Robin are 2, and they have one child that lived with them, so they get 3 exemptions. Okay, so that's how many exemptions can they claim? 3. So far, so good? The next thing we want to do is we're going to add up their gross income. So if you look at, that's listed as example 5. So they have $65,120.97 and $52,126.76 plus bank interest and stock dividends. Now, they're not listing separate banks or separate stock, so we're going to assume that it's just one source at this point, so we're not going to need the Schedule B yet. Okay. So we're going to add these together. And that's their gross income, their wages. Oh, sorry. Okay, this is box. This is box 15. These two together would be box 7, or line 7. I guess I should say line 7. I got ahead of myself. That's going to be 11724,773. Okay, so their wages, salary, and tip is the 11724,773. Okay. Taxable interest was 987. Stock dividends were 1,200. They didn't have any of these that we're aware of. So that's when we get to their so we add up those three numbers to get to their adjusted gross income or total income. Okay. Now, we don't have any information about these, so we're assuming that they don't have them unless we're told specifically that they had any of this. So they don't have any of that, so their total adjustments are 0. So their income is 119,434. So far okay? Then we take that over to the other side. And it was what, 70, 73. Okay. We're going to say they don't have any of these. They're not filing separately. They are married, filing jointly. So their standard deduction here is 11,900. That goes on this line. And then you subtract 22 minus 24. Okay. Then you have exemptions. They had 3, right? So we're going to do 3,800 times 3, and that gives you 11,400, which you then subtract from the 107,534.73. And that gives you an income of 96,134.73. That's their taxable income. So we subtracted and we subtracted. To get to their tax, we go to the tax table. And they're under 100,000, so they'll still be in the tax table. If they were over 100,000, we would use one of these worksheets, but they're in the 90,000 still. So they're 96, huh? Yeah, just barely, yeah. 96,134 is going to fall between 100 and 150. They're married filing jointly, so 16,091. Okay. We're going to ignore all the credits for right now. We will go into some of these in a little bit, but not right now. We're just going to ignore all the credits. So they have 16,091. Okay. We look back at their W-2s to get their total tax that they paid. Okay, they paid $8,765 here, 0.99, and 1619865. So all together they paid 14964.64. Okay. We're going to ignore all this for right now. They owe 16,000. They paid 14,900. So they paid less than they owe, so we subtract. And they owe $1,126.36.